Hello, everyone. Welcome in. We are going to give folks a couple minutes to join us in the conversation. But if you're here, please drop your name, your business, what you provide as far as services or products, and where you're located. And if you don't know who I am Brittany Rivera. I am the program director for EMSDC, and you are in for a treat. So we're so happy for you to be here. Take time out of your day. I know that's not easy for small businesses or diverse businesses. So thank you so much for taking time out of the day to invest in your business. Kurt, I think you have your hand up. Do you want to talk? I'm going to allow you to talk, Kurt.
Hey, so can you hear me?
We can hear you.
Yeah, that was my question. I was like, how come I can't be heard? Because I wanted to say something.
Uh, So if you don't know, Kurt is also a part of the EMSDC team. Kurt, take it away.
Oh no, I just wanted to say hey to everybody, and I support Brittany Rivera. I'm a big fan.
Oh,
Thank you, thank you. Kurt, we're gonna move you back, okay?
Yeah. Just just mute me because it's not worthwhile. But no, I was wondering why. I really honestly was wondering why I was muted. But then I also don't see that I'm on the camera. Like, is the camera disabled too?
No, so just so everyone knows, we are in webinar featuring, so you won't be on camera. However, if you have any questions or anything like that, either you can raise your hand or type it in the Q&A. If you'd like to speak, we can bring you up to stage like we did Kurt. So if you are comfortable, we will do that.
All right. I put on my best spring shirt for no reason. Darn
All
it.
right.
All right. Mute me, please.
All right. Bye-bye. Right. So yes, if you're just joining us, please type in the chat where you're from, what your business is, what service or products you provide, and your name as well, so we can get an idea of who's in the room. And make sure you reply to everyone and not just the host and panelists. If you have any questions, once again, please use the Q&A or feel free to raise your hand. Depending on how this presentation goes and how Nancy would like to, we will either be taking Q&A during the presentation or right after. So I'm going to get started because we're about 4 minutes out. And I'm going to introduce Miss Nancy. I've had the pleasure of actually connecting with Nancy to provide our EMSDC folks with a series. And if you aren't aware, we are on a weekly cadence for 3 weeks. So this is our first kickoff, which is talking about access to capital 101, 101, and 102. So we're really happy to have Bank of America here, and we've been working on a relationship and partnership with Bank of America as well to help provide resources to our diverse businesses. So I'm going to introduce Nancy. Nancy has over 32 years of commitment to assisting borrowers in obtaining financing. She holds the position of Business Community Officer at Bank of America, where she advocates for diverse, multicultural, and under-resourced communities across Massachusetts. In her role, she promotes education and awareness regarding the various resources available to enhance entrepreneurship and facilitate access to capital through workshops, panel discussions, and speaking engagements. Nancy is the primary contact for the greater Boston business community and collaborates extensively with local business organizations and nonprofits. She's also a highly regarded keynote speaker and leader of financial literacy initiatives, and her main objective is to empower women and biopic entrepreneurs in overcoming systemic barriers. So I have, again, had the pleasure of working with Nancy just to get this started, but Nancy is also a great speaker, and I think you guys are really going to enjoy this. So again, I'm going to bring Nancy up so that she can begin her presentation, and if you have any questions, please feel free to type them in Q&A.
all right. Brittany, thank you so very much for that warm welcome. It is an absolute pleasure to be here with you all today. I see we're a fairly small group today, so you're in for a treat. we have the opportunity to have a really intimate, casual conversation. If you have any questions, any feedback, you would like to raise your hand or shout something out, please do so. And it's my understanding that Brittany and I believe, well, I think the chat will be moderated, not by me, but you can also potentially put any questions or comments that you might have in the chat. So without further ado, we're going to spend the next 45 to 55 minutes together talking through how do you access capital as a business owner? And I want you all to think about, am I capital ready? I'm going to teach you both ways to access capital via traditional means at a bank or a financial institution. And then at the very end of our presentation, we're going to look at what are the alternative ways to access capital, particularly if I'm not ready for bank capital, okay? And what that really means is either you're a new entrepreneur or a founder, or maybe you haven't been in business long enough. There are multiple ways that we can help you access the capital that you're going to need to go to market and reach the pinnacle of your dreams. So without further ado, I'm hoping everyone can see the screen. Certainly let me know if there are any tech issues. We are going to look at what factors are out there. What do banks really look for and look at when a loan application comes in? We're also going to talk about the importance of setting up your own team, really doing everything within your power to make sure that you're submitting an application that is going to meet the criteria or the buy box that the bank has. And then what are some of the smaller things that we can do to kind of help you if you're not really where you want to be just yet? Of course, we'll talk a little bit about business credit, why it's important, how it might be a little bit different than personal credit. And then at the very end, we're going to wrap up some financing options that are very common, not just at Bank of America, but throughout the banking industry. And like I said, raise your hand or shout out a question if there's anything that comes to mind, okay? So first off, if you don't know, there are approximately 32 million small business owners across the entire country. That's a lot. It's a big number. Of those 32 million, only 3.1 million businesses are actually owned by people of color. So I am dedicated, as Brittany explained earlier, towards changing that narrative and introducing you all to the ecosystem that exists at Bank of America and within the small business community where you live. So I want you to think about how you can take those next steps forward. Many times in moving ahead, you are faced with the need for some sort of capital, some sort of financial injection, okay? And it's not a bad thing. So looking for some sort of funding or capital is not synonymous with your business not performing well. It's actually the contrary. So as your business grows and expands, that's typically when a bank receives a lot of requests for capital. It could be an indication that you're buying a second location, or you need equipment to expand, or maybe you're bringing on a tech director or a human resources professional. Applying for a loan is actually a good thing. So what are some of the things that you all as existing business owners or early stage founders can do to make sure that you're building the right foundation, starting at the ground level, so when you apply for capital, you have a greater chance of approval? Well, not sure if you've ever thought about this before, but we suggest highly in establishing what we call a personal board of directors, okay? So this is your personal board, it's your team. You want to surround yourself with experts in various fields because you went into business because you were an expert in the vertical that you chose. You're either an expert at marketing, or you're an expert landscaper, or an expert CPA. So what we want you to think about is partnering with professionals who know more than you do perhaps in certain areas so that you're protected. The first one is your banker. So wherever you bank, you should always have a very close relationship with your business banker. The business banker is really the quarterback for you at your bank of choice. They're going to help you navigate any red tape that exists. They're going to let you know about various promotions and offers, anything that can really help your business grow and scale. And they can also help you tell your story when it's time for you to apply for a loan. So the last thing you want to do is just apply online and hope for the best. No, if you sit down with a business banker and you really are vulnerable, you share your why, what problem it is your business solves, what makes you uniquely qualified to solve that problem. Talk to your banker about any potential hiccups or bumps in the road that you've had, whether it's credit, whether it's something that occurred during COVID or something, out in the local economy. We really can sing your praises and help you get approved, because it's our job as bankers to have a telephone or an in-person meeting with our underwriter about your loan request. Okay. Similarly, having a strong relationship with a legal consultant, typically an attorney, a business attorney, they can help you set up the right legal entity and also protect you in the event that you have intellectual property or you have a patent that needs to be logged on the patent system and insured. You definitely want to protect your biggest asset, which is essentially your business. And then, of course, you want a CPA or an accountant on your personal board of directors. So this person will keep you safe from Uncle Sam. They'll help you mitigate taxes, but doing so in a legal way. Compliance is very important. And they can also strategize with you and for you. So when you choose an accountant or a CPA, you're not looking for someone just to compile your tax returns every December or January. What you want is someone who specializes in your industry, if you can find them, and you want to have a meeting with them several times per year, so they're acting in an advisory council manner. They're helping protect you, they're giving you guidance. They may have other clients in your same industry, and they can be a wealth of knowledge. Lastly, technology and human resources. These are two that I'm coupling together because a lot of new businesses don't feel they can afford an HR person or a tech director or a tech person. And I would almost argue that in today's day and age, you can't afford not to have someone at the head of your technology. Life is changing so quickly. AI is becoming such a big piece of a lot of what we're doing. So you can certainly do your research, maybe have a relationship on retainer versus hiring someone. There are a lot of different ways that you can consult with a tech director and also a human resources person so that they can help you navigate leadership issues, building a team, putting together a handbook, etc. So what I'd love to challenge you with is really just the simple question. Who is today on my personal board of directors team? Do I have the right people? Do I need to pivot? Do I need to change anyone on the board, add or subtract? Okay. Only you can answer that question, but it's a really good question. The foundation that you build at the beginning of your journey is really critical to your future success. And I say that because I've been in the business for about 30 something years, and that there really are three reasons why a lot of businesses fail time and time again. Number one is cash flow or poor cash flow. Number two is a lack of planning, which I think the board of directors really speaks to. And the third is access to capital, which we're going to talk about right now. So please spend some time really thinking about your board of directors. Now, I promised you we were going to talk about what do lenders look for? When we take in a loan request, there are tax returns, there are profit and loss statements, balance sheets, sometimes W-2s, A lot of paperwork, a lot of data, right? So what do we do with that data and why do we collect it? Well, 6 C's of credit, which you see on the slide, really speak to what we look at, and I'll explain to you the why. So the first is capacity, okay? Second is conditions. We have character, communications, collateral, and capital. So I'll start over and show you exactly what they mean. When you apply for a loan, the first thing that a lender needs to know is if we're going to get paid back. We call that capacity or cash flow coverage. So to keep it really simple today, what we're looking for is $1.25 of excess cash flow for every dollar of expenses, okay? Now, for those of you who may not love numbers or accounting, I get that. So I'm going to keep it even more simple. All we do essentially is we add up all of the minimum payments on your personal credit report. So think about your mortgage, if you have any student loans, if you have a car loan, any credit cards. We're only looking at the minimum payments, okay? So you can put that in column A and you can total that. And then we're looking at your business credit report. Same thing. Do you have any business debt? Business mortgage, leases, lines, etc., or even minimum payments on credit cards. That's column B. I want you to add those up, and then you've got to multiply that by 12, because everything we do when we calculate your capacity is on an annualized basis, okay? So now we know what debt you have. Usually somebody might raise their hand in a presentation like this and say, hey, Nancy, like, why do you care about my personal debt? Why do you care if I have a student loan? This is a business application. And I would say you're absolutely right. But anytime you're a small business owner, and by definition, that's usually about $20 million in revenue or less, the bank will consider you to be synonymous with your own person, if you will. So your business and your person, your individual assets, liabilities, situation is really one calculation. Think about it like this. When Home Depot has a bad quarter and they need funding, the CEO, the CFO, the marketing director, they don't go to their 401ks or their savings account to pull funds together. No, they're a corporate entity. But when you or I, small business owners, when things don't go our way and we need funds, we typically will look to our home equity lines of credit. We'll look at our savings account. If we're blessed enough, we might have a family member who will contribute. So because of that, small business owners always have to apply with their personal credit rating and their debt. So it's one calculation, okay? And then on the flip side, we also look at your income, your personal W-2 income, your personal income from the business, and then of course, the business revenue or net income. And we meld that all together in one calculation. So we take your income and we divide it by your debt. And if it's at least 1.25 or better, we have a loan, okay? So I know that was a little complicated, but essentially you want to show about 25% profit, if you will, for every dollar of expense that you have. Then the second C is called capital. And capital is really another word for ownership. How much equity in the business, how much skin in the game does the business owner have in the business, okay? So for example, if your business is worth $500,000, but you somehow have a loan against the business, maybe it's a mortgage or something of $600,000, you really don't have a whole lot of ownership because you're over leveraged in that example. You owe more than the business is worth. We don't see that a whole lot, but I thought I'd just use an example that everybody would grasp. And then every loan typically needs some sort of collateral in order to get approved. Now, collateral is really another name for insurance. In the event, let's see, I'll figure out, let's see, Belinda Johnson, if I were to lend you $100,000, what could you put up in terms of collateral, and you don't have to answer, just something to think about, equal to $100,000. That's how banking works. So we would secure either accounts receivable or inventory or any machinery that you have. Some people have intellectual property that could be considered an asset. So most loans in the banking industry will require dollar for dollar collateral. Towards the end of my presentation, I will give you a sneak peek for some types of loans that don't require collateral. But for purposes of right now, I'm really just trying to teach you all the basic fundamentals of how small business and commercial lending kind of works. So collateral would be like a one-to-one exchange. Then we have conditions. Now, conditions is really the only C where you and I don't really have a whole lot of control. Conditions refers to the macro and the micro economy. What's going on in the world that could potentially prevent Joshua Napper from paying his mortgage or his loan? So, Josh, I'm sure you remember 5 years ago in COVID, many of us, could never have expected that we wouldn't be able to go to work, or certain businesses would shut down. We couldn't go to, our children needed to be homeschooled. Our whole world changed. That is something that none of us could have seen coming, nor could we have prevented. So I hope nothing like that ever happens again. But even the LA fires in Los Angeles, that is a condition that exists out there in the world that could prevent a client, a borrower, a customer from paying back their loan. So conditions is something that an underwriter will look at. I will say that it's probably not something that is going to cause a decline of a loan. It's just one of the 6 C's, and it's something that they take into consideration. But really, if you don't have the capacity to pay us back, or the collateral or the capital, that's not going to matter. Conditions are just something that the underwriter needs to take into consideration when he or she is looking at the big picture. Okay. All the other C's you and I have control over. And the next is character. And I have a feeling that everybody on this call knows that character really means credit. How responsible are you? Do you pay your bills? If your credit limit is $10,000, do you typically stay under 30% of that limit? That's good, responsible credit worthiness, if you will. Character could also pertain to your resume, your brand, your reputation in the industry that you're in. So it all kind of rolls up to character, and definitely plays a small part in your loan approval. Last but not least, this last C was added about a year ago. So I've been in credit for over 30 years, and there were always 5 C's. Last year, we added a 6th C. And ironically, it is now my favorite because it makes so much sense: communication. What this refers to is you sitting down with your banker, and as I said earlier, explaining to the banker, why are you applying for a loan? What is the loan going to do for your bottom line? Are you looking for a loan because you need to buy 2 box trucks, and the box trucks are going to grow your revenues by 15% next year? When is your expected return on investment? What does that look like? Explain to your banker, like I said earlier, if you've had any turbulence, if you've been through the storms and you came out on the other side, we want to know about that. Because guess what? Your credit report, your financials, they don't tell us any of that. And at least at Bank of America, it is our policy for every loan application that we bankers actually have a conversation with the underwriter to explain the whys, the whos, the whats, and really bring life to your application. So there you have the 6 C's of credit. And this is fairly standard at every single bank you can think of going to. So here is just on this slide, this is just sort of a summary of what we talked about, and a little bit more verbiage of what they all mean. And again, the only one that we don't have a whole lot of control over is really conditions. Okay. I'm going to pause there just for a moment because that was sort of a lot. So, Brittany, if we have any questions or if there's anything in the chat that I can answer, I would absolutely love to do so. Do we have anything?
Not seeing anything in the chat.
All right.
As far as I believe somebody asked if this is going to be repeated. We are recording the webinar, and I did fail to mention to that in the beginning of the session, but I don't see any Q&As.
Okay.
However, reminder, if you are able to, please feel free to use the Q&A if you need to or would like to also talk. Feel free to raise your hand.
Thank you, Brittany. Excellent. Okay. So moving right along in our credit conversation, I think I mentioned this earlier, but when you make a loan request, you really want to be specific and you want to explain how are the funds going to be used. And you want to think not only about the short term, but also the long term. And you don't want to do one of these, oh, just approve me for however much you think I qualify for, because that is sort of a negative when a loan application comes in. Conversely, we would want to see a breakdown. So today I'm applying for $30,000. $19,000 is going to help me purchase, a pre-owned box truck. $5,000 is for me to build a new website and to make a couple of payments on a contract. You want to be very, very specific. And you also want to ask for advice if you're stuck, because you may think that you need a line of credit, but you'll learn in a few minutes down the road in our presentation, lines of credit and term loans are quite different. So we really want to understand the request and we want to make sure we get it right. Because if we only give you $30,000 and you really needed 42, we could be setting you up for failure, believe it or not. And frankly, if you apply for 42 and you don't qualify for it, we at least will come back with a counter offer and say, hey, I know you wanted 42. We're only able to extend 37, and here's why. But we will also put a plan in place with you so you can still find a way to access the remaining $8,000 in capital that you need. Okay? I'm hoping that helps. So thinking about credit, thinking about you all being business owners at various stages. We may have some early stage founders on the line with us today. We may have some who have been in business for quite a while. Credit in the conversation around credit, I think, is still valuable no matter where you are in your journey. Everybody always asks us, how many trade lines do you think are ideal when you finally reach a place in your journey and you have great business credit? It kind of looks like this, like you see on this slide. We call it the 5-3-2 rule. So when you submit an application for a loan, the lender is looking for a history. Does the borrower have at least 5 active trade accounts? So trade accounts are credit cards, loans, vendor credit, leases, mortgages, you name it. And do they have maybe 3 business credit cards? Now, if you're looking at this and you're surprised, it doesn't necessarily imply that you have 3 credit cards that are maxed out. It implies that you've been approved for 3 credit cards, and maybe you use them sparingly for expenses and materials, or maybe you have a card where you put all of your travel because you're receiving travel points or you're getting cash back. We're just looking for responsible patterns, if you will. And then you'll also reach a pinnacle where you've had 2 accounts that you've paid in full. So this is an example of a very mature business credit report, 5-3-2. This is not meant to discourage you if you've only been in business for a year or so, you're not quite there. So I just wanted to make that point because I don't want to scare anyone away.
We do have a question. I didn't know if you
Right.
wanted to take it now. But it says, how does NAICS code impact lending decisions?
I love the question. So the NAICS code, so for anyone who doesn't know what that means, it's NAICS. And you'll find a NAICS code on your tax return. And a NAICS code really breaks down like what industry you're in And then sometimes there are subcategories. So the broader industry might be healthcare, but you may be a dentist, or you may be um, a mental health provider. So a NAICS code helps with lending because with each certain amount of risk, and that's where the NAICS codes come in. So we have to look at each industry and the specific risks that are inherent just by nature of what you're doing for a living. And then we look at your personal credit, your cash flow, your capacity, the conditions, etc. So I'll give you an example. So let's see. So we actually love lending. I'm sure this is no surprise. We love lending to healthcare. Why? Because it's one of those commodities. Everyone on this call, and I think there are probably 18 of us, we all probably have a doctor, a dentist, maybe a specialized, maybe a dermatologist, who knows. Sooner or later, we're going to be made. Healthcare is not going away anytime soon. Studies show that we're all living longer, healthier lives, etc. So healthcare is a pretty good bet. Most healthcare practitioners are going to be successful. However, what do you think about restaurants? Some of them are here today, gone tomorrow. Sometimes we hear that 85% of restaurants fail in the first 3 years. So in that example, knowing what the industry is going to dictate like really how we look at that application. So I hope that answers whomever's question that was. I love the question. Thank you. Keep them coming. So if it doesn't help, please update the chat and I'll try to do better. Thank you, Brittany. Okay. So for those of you who are thinking of applying for some sort of credit facility, a line of credit, a loan, maybe equipment, what are some of the things that you can do to improve your chances of getting approved? Well, we've already talked at length about working with a specialist, someone who cares about your success, someone who can navigate the uncharted waters at the bank. You'll also want to start gathering information before you're ready. And they always say, you want to apply for credit or capital when you don't need it, right? So what that really is saying is when things get tough and your cash flow is poor, that's typically when you want to raise your hand, and we see a lot of applications come in, I need help. But by that point, your financials don't look strong enough. So this is sort of an advertisement. You want to apply for a line of credit or a loan at the top when things look really solid and your business is going well. Okay. And sooner or later, like I said earlier, you are probably going to need some sort of access to capital. And the amount and the type of capital is really going to come down to your specific need. So on this slide, there are 3 different credit facilities. We have business credit cards, we have lines of credit, and we have term loans. So business credit cards are actually a really, really smart way to impact and improve your cash flow. Okay. So I'll give you an example. A lot of businesses need to order a tremendous amount of supplies and materials to do what they do. So one of my husband's businesses, for example, he owns an insulation company. So he has to order a lot of material, and it comes in from overseas at the beginning of every month. And we're talking like, hundreds of thousands of dollars. He essentially has to prepay it in order to get it shipped here before he's actually going out to do jobs. So that could be a strain on your checking account. And maybe it's not $100,000 in your business, but maybe it is a huge outlay of cash. So you're essentially fronting it, and then you're not recouping until your customer actually pays you. And that could be 30 days, it could be 60 days and more. So what we encourage all of our business owners to do, regardless if you're in healthcare, you're in the trades, you're in marketing, you're in IT, you're in education, it doesn't matter what you're in, you all have expenses. And maybe you don't have materials, but I'm looking in my office. I have an electric bill, I have internet fees, I have license fees, I have insurance. All those carrying costs should and could be put on a business credit card. Now, depending upon where you bank, You might receive cash back rewards, like we have a Bank of America, or travel, also like we have a Bank of America, and there could be other rewards. And the reason you want to put all of these expenses on a card is there are really multiple reasons. Number one is cash flow. You charge everything you can for the business, and then at the end of the month, you pay it off in one lump sum. So I'm not encouraging you to keep a balance because rates are on the high side if you have a balance, and we don't want you to pay any finance charges. Number two, you want to establish a business credit rating separate from your personal credit rating. So every time you charge your electric, your insurance, your supplies, your gas for the car, you're building up your business credit rating. And we do report to the credit repositories. Bank of America is, in fact, the only financial institution who provides a business credit score and report to its clients free of no charge at all. Okay. The third reason is, of course, cash back. Who doesn't like to earn cash back? So at Bank of America, if you are a client, our Platinum Honors clients receive 2.62% back for every dollar spent. And I love telling this story. We actually have a client, this is probably 3 years ago, who put his son through 4 years of Providence College here in Rhode Island via earning cash back. So you must be thinking, that's crazy. The numbers are not, the math isn't mathing, as they say. Well, this client spent over $115,000 a month on his business credit card. And if you do the math on a calculator at 2.62%, you can see how his child's education was paid for. So that story is a little bit of an outlier, but we do have clients making a lot of money with cash back. And you can reinvest that into the business. You can buy marketing, advertising. You can take the proceeds in the form of a check personally for the business, you name it. Or you could even just reduce your statement balance if you like. And there are more reasons as well, but the major reasons are that you want to separate your personal from your business, you want to build your credit rating, and you want to use the bank's money as long as you can so you have better cash flow. The second credit product is a line of credit. Now, a lot of individuals seeking credit, like I said, will either call the bank or go into the bank and say, hi, I need a line of credit. I'm buying a backhoe, or I need a line of credit. I'm going to the auction and I think I might want to buy a pre-owned van. And I'm here to tell you that we love doing lines of credit. We offer them. I think that it's probably something that every business should have. But a line of credit should really be targeted for short-term cash flow needs, as it says on the slide. So I'll give you an example. Landscapers, for example, they run seasonal businesses. And at least here in New England, where I am, most of them are really busy March, April, May, June, July, August, September, October. Things start to peter out a little bit in November as the ground starts to freeze and things get cold. And they usually lay off their team November, December, January, February, or they pivot to snow plowing. So guess what? In November, December, January, when they have nothing coming in the form of income or revenue, they still have bills to pay. So a line of credit would be perfect for a business that is seasonal, like a landscaper. What they do is they tap into the line of credit, call it November, December. They pay their bills. They might have payments on backhoes, on F-150s, on different pieces of yellow Peterbilt equipment, whatever it is. They tap into it. And then when things get busy and their customers start to pay them, call it April, May, June, they pay their balance off to a zero. So if we were looking at a statement for the year, the balance would be going up, 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 and then it would kind of be on the downslide, and then it might go up again when things get slow. And that's perfectly okay for a line of credit. So the bank loves to lend and extend lines of credit for temporary cash flow uses. Another example of a line of credit need might be someone who can get a trade discount for buying a plethora of inventory. So if you are in a situation where you can buy a ton of inventory at once at a discount, but you don't want to drain your checking account because you know you're not going to receive the profit on that material, that inventory for some time, you would be a really good candidate for a line of credit. And then when you do sell the material, or you put the material to use and you have an end product that someone purchases or uses, you pay us at that point. So that's a temporary cash flow need. To the contrary, we have business term loans that will help you either finance a fixed asset, like that backhoe for that landscaper, or if you are renting space, but the space used to be a cafe and you own an IT company, so you need to knock down walls and make it look different than it is today, you could actually do a term loan and we could help you. Term loans are fixed rate loans rather, and they kind of work like a car loan. So I think it's Khalil Salam. If I were to help you with a $50,000 term loan, we would put $50,000 in your business checking account after approval. And then every 30 days, you'd have a payment due with a fixed payment, of course, from a beginning and an end with no penalty for prepayment. So it might be a 4-year loan, a 6-year loan, etc. And there would be a beginning and there would be an end to that loan. Okay. So those are the 3 common credit facilities. And Brittany, if you'll allow me to, I'd love to open it up just to see if there are any questions or feedback on these 3 credit facilities.
Anyone has any questions, feel free to raise your hand if you can. We can bring you up to ask the question. I do see
Looks
one.
like Uriah has a question, or Uriah?
Uriah.
Uriah, sorry.
Yes, thank you. Let me know if you can hear me. Can you hear me now?
Yes.
Thank you so much. I'm in a unique position here. Thank you for sharing your knowledge.
You're welcome.
I've got like 5 pages of notes already.
I love
But
it.
just really excited because I've literally put I put my everything I have into what I do. I'm a former musician. I was a musician for 25 years and started a trucking company here. And I liquidated my retirement from teaching to the tune of about 100,000 and put it into my company. I kept 70,000 in the bank, paid down 35,000 of my debt, and kept 35,000 in the bank for about 6 months, and was able to secure an SBA express loan of about 25,000. It didn't start off all at the same time, but I'm sharing that just to share how invested I was into this. Not only did I do that,
Right.
I was able to secure and get my CDL. But when I started the business, I could not have planned for the storm that I encountered. In the transportation industry, you need, I guess you need to mature on your authority. And the projections that I made, I wasn't able to even start until my 4th month. So not only did I have the bank loan, I had the truck loan, and I'm literally not bringing in any money. And so, I'm reeling, I'm calling friends. I thank God I have wealthy friends. They helped me out to the tune of 51,000. And here I am now, a year. I'm almost 3 years at the mark, and I'm doing everything I can to try to save the company, even getting back into the music industry so I can get capital. And so I'm looking at these options here. What suggestions do you have? Because I literally spent all of my own personal capital in order to try to save my company. And I met with the head of SBA here in PA, and he said, that's the worst thing you could do. So like, I'm here like trying to save my company.
Yes. Well, thank you for sharing your story. I can appreciate your journey. I'd be remiss if I didn't say that I heard that the transportation industry was struggling mightily. What I will say is at the very end of our presentation, I'm actually going to give you my contact information, and I'd love to engage one-on-one
That's perfect. Thank you so much.
Oh,
Thank
you're
you.
welcome. Thank you so much. And is it Uriah? Because I want
Yes,
to
that's
pronounce
it.
your name properly.
Yeah,
Wonderful.
yes, that's it. Thank you. I
All
didn't want to
right.
take too much time, but I at least wanted you to see
Thank you,
my
Uriah.
passion, and I look forward to connecting with you. Thank you for this.
Likewise, right on. So Uriah almost anticipated what I was talking about next. So thank you very much. I appreciate you. So we're also an SBA preferred lender at Bank of America, and Uriah knows, but for those others who may not know, SBA stands for Small Business Administration. Being an SBA preferred lender means that we can actually make our SBA loans in-house. We do not need to send them off to the government or the SBA. We have 7A, 504, and like Uriah got, we have express loans. So whether you're financing equipment, you're purchasing a building, you need cash flow for a specific project or working capital, chances are that the SBA has a solution for you. And we love working with the SBA because they do have slightly looser guidelines. So remember, we were talking about the 6 C's of credit. So instead of 1.25 for every dollar of expenses, the SBA says, hey, let's make an exception. We just want to see $1.10 for every dollar of expenses. So it's a lot easier to qualify, okay? We also offer mortgages, and I hope you'll join me next week when we have our workshop together, where I'm going to teach you as a business owner how to purchase commercial real estate. And then if we have any docs, dentists, or veterinarians on the phone or on the line with us, we have a special department where all we do is lend healthcare professionals, typically startups, and typically at 100%. So keep that in mind. Or if you have a sibling or a family member who may be in dental school or maybe out of school, kind of saddled with debt, and they don't know what their next steps are, we can help them, okay? So I'm actually going to skip this page and I'm going to go right to my other deck. I promised you all that we were going to talk about traditional lending, which we just did. And then I was going to close with alternative lending options. So what does that mean? So what I'm referring to are other ways, other solutions. If you say to yourself, like, hey, this all sounds great, but I don't think I have the cash flow to qualify, or I don't have that collateral that Nancy was looking for, or I've only been in business for 6 months. I'm not going to qualify because the bank always looks for 2 years in business. So I'm going to pivot and we're going to talk about a relationship that we have with CDFIs. On the screen, you can see it stands for Community Development Financial Institution. We also have grant funding that we can align you with. Bear with me for 1 second. I am going to switch screens. So I will ask for someone, could be Brittany, could be anyone in the audience. Let me know when you can see a screen or a slide that has a bunch of highlights on it and it has Center for Business Empowerment at the top. Are we good?
I can see it.
Awesome. Okay. I want to be respectful of your time. So I'm going to go a little bit more quickly, but not too quickly because this is important stuff. So we've created at Bank of America a Center for Business Empowerment portal or hub. And it's really geared towards all of you on the phone, whether you're a small business owner, a medium-sized business owner, you're a brand new entrepreneur, or you've been in business for 10 years, doesn't matter. This is the All Things Small Business portal. I highlighted for you just to make it easier to get there. And then you can drill down to the Women and Diverse Business Owners segment. You can double click in the left-hand corner on women business owners, Black African American, Hispanic Latino, Asian American, Pacific Islander, and you can find tailored resources that speak to the needs in your community, whether it's education, whether it's grants, whether it's trends in different businesses, you name it. It's a wonderful resource. And on top of that, we want to show you how you can qualify for alternative lending solutions. I promised you guys this. So we're going to spend a minute or two here. Our Access to Capital directory is available to each of you, whether you bank with us or not. It does not matter to us. What we're trying to do is show you that there are other ways outside of bank funding for you to access capital. So CDFIs are not banks, but they make loans. CDFIs are usually within every large metropolis. They're in a lot of different towns and cities where you all live. And they provide technical assistance. They provide microloans. They do some SBA financing, workshops. They'll help you with the business plan, you name it. We also have grants that come available from time to time, okay? And all the specific guidelines in terms of, do I qualify? Don't I qualify? What do I have to do to, potentially be awarded a grant? So we also have venture capitalists, angel investors. Typically, venture capitalists are groups of investors who come together. You've all seen Shark Tank. You may have a business or you might be in an industry where they really, really believe in your business model and your plan, and they will pool funds together to support you. And those are usually for companies that have been around for a little. They may be in their second or third stage of seed funding. And then we have angel investors who typically get involved at the onset when you're really going to market as a new founder or entrepreneur. What this looks like, you can see in the center of the screen. Once you double click on the blue link, it's going to open this menu. And all you need to do to keep it simple, you can play with the different filters, but I like to cast a wide net. So where it says Native American, you can actually white that out and type in Philadelphia, type in Boston, Chicago, wherever it is that you are. And all of the CDFIs, venture capitalists, crowdfunders, you name it, will come up. And then you really just have to either work with your banker or do some of the research. All the websites are included, phone numbers, the contact information, the buy box. And if you want to take it a step further and you say, Nancy, this is a great resource, but I'm still not sure. Do I need a loan? Do I need a line of credit? What do I do? To that, I say, you've come to the right place. We have another resource called the Access to Capital Connector, which you can see in the right-hand corner, actually connects you with a live person, someone who's going to care about your success as much as I do. And they're going to steer you in the right direction as to whether or not you're ready for a loan, you have all your ducks in a row, your capital ready, or should you go back to the drawing board and strengthen your business plan, okay? So I will show you at the very end how to reach out to me directly. And if you like, we can do the Access to Capital directory together, okay? Meanwhile, trying to use the best of my next 6 minutes of time, we have a number of partnerships with various nonprofits across the country, like our Latino Business Action Network. We partner with Stanford University and Ivy League to help Latino entrepreneurs with a 9-week hybrid program. We also have a program for Native and Indigenous communities. National ACE is our National Asian Pacific Islander Chamber of Commerce. I'm actually the lead for that Chamber of Commerce. And then we also have a different program called Grameen. This is a little bit different. It's for women entrepreneurs in low income areas. And there's a lot of education involved in addition to small grants. And then lastly, in the right-hand corner, Bunker Labs is exceptional. It's really fantastic support for our veteran brothers and sisters and their parents. I'm sorry, their families and spouses. If you are anything like me and you love to learn, you can log in by just grabbing your cell phone, taking a picture of the QR code, and you will have access to our online portal where I, as well as some colleagues of mine, teach a couple of classes per day, whether it's cash flow management, commercial real estate, a class like this that we just had. And they are live webinars. They are an hour each, and you can sign up anytime you wish. Like I said, whether you're a client of the bank or not, we welcome everybody, okay? And again, if you love to learn, here's a great opportunity to log into our Tory Burch Foundation Business Webinar portal. It's the largest online, on-demand educational portal in the country. And on demand means that you and I can log in to learn whenever we like. It's all pre recorded. You don't need to be present at a certain time. There are webinars, articles, videos on networking, cash flow projections, how is AI impacting my business, thought leadership, global trade, you name it. World class stuff. And I usually log in at least once a week or twice a week. So I kind of like stay relative, and I want to be one of the best conversationalists in the room, right? So that's where I get all my insight. And then last but not least, and Brittany, you'll have to keep me honest here because I can't see cameras. How many of you, men and women, how many of you would love to obtain a business certificate from an Ivy League school at no charge? How do we do, Brett? We have any takers? Can you see cameras?
See at least one hand.
Okay, I'll take it. I think you said we weren't on camera anyway.
Yeah.
Bank of America has been partnering with Cornell University for the better part of, I think it's 5 or 6 years. We've graduated more than 70,000 individuals from this program. And it is extremely popular because typically when you take a class at an Ivy League school, you're looking at $4,000 to $5,000 at least. So you as a business owner or aspiring business owner can learn how to launch, grow, and scale your business for 12 weeks. It's on-demand learning, which means you log in when it's appropriate, when you have time. There are 6 modules, and they last in 2-week durations. And this class, like I said, is graduating more than 70,000 people. It's sponsored by the Bank of America Institute for Women's Entrepreneurship at Cornell. But men on the line, you have a personal invitation from me to sign up as well. Okay? Last but not least, especially for you, Uriah, this is my contact information. I was nice and tan. I had a good hair day that day. If you scan the QR code, it will bring up my phone, my email. You can text me. I love small business. My husband has 5 small businesses, and I love absolutely helping him navigate the current landscape. I love helping him to grow, think about his priorities. It's just really nice to have someone by your side who can listen to your business model, lend a hand and some expertise, and kind of just, provide some advice with love, of course. And I know we have some questions from Lockie, Belinda. We have some hands raised. Brittany, I'll let you quarterback.
I did
Chat.
see that someone in the chat asked if you could go back a slide.
I
So
sure can. This one,
I believe so.
Cornell, or the Tory Burch? I'll leave it here until I'm told otherwise.
I think that might be it.
All right. And I will tell you, if you look at the left-hand corner where the website is, what you'll do is you'll register, and you'll be in an information session with me probably for 30 minutes, where I get very specific and granular, and I kind of show you the course. And then if you decide you'd like to apply and go forward with it, you'll have all the information to do so in that 30-minute session. And the classes are ongoing. It is first come, first serve, but there's always a spot for you. It is ongoing. And we also teach in Spanish.
Good to know.
Yeah, absolutely.
I did drop Nancy's at least phone number that she had on the next slide for the chat, just in case you're not able to scan that QR code. I'm also going to drop her email in.
Thank you. That'd be great.
Who may not be able to scan. And then there was a question, I'm not sure if it went away, but I think it was from, let me look through my list. You may have hopped on, but oh no, I think it was from Leo, and Leo has been with Bank of America for quite some time, and I think he wanted to know who or how can he get in contact with potential boards or anything like that?
Everything will come through me. So Leo or anyone else who has a question like that, communicate with me via email or call me and I will make introductions. Even though I'm in Boston, at this point, I'm covering all of the Northeast. And I've been with the bank for 13 years, so I know my way around pretty well. And whatever I don't know, I will secure an answer for you.
Perfect. And then I believe I saw somebody in the chat asking about recordings. All recordings will be posted in our video library at emsdc.org. You can use that for multiple events that we've had or webinars that we've shared. So you can have access to this webinar as well as additional webinars that we have hosted in the past. I don't see any questions.
Okay.
However, I'm going to give a last call. If you have a question, please raise your hand so that we can answer it as fast as possible. We are running a little over on our time.
My fault.
Not a problem as long as you don't have anywhere to be. But if you don't have any questions, I definitely would like to thank Nancy for sharing her information with us. And if you haven't already known, we are in a 3-week series. So next week, we'll actually be touching on the topic of purchasing owner-occupied commercial real estate. And if you did hear Nancy's statistic in the beginning of the class, I think you said only 3% of small businesses actually own real estate. So if you are interested in that topic, if you know someone who is interested in the topic and not a member of EMSDC, please feel free to share the information. It is a free webinar, and we'll be back next week.
All right. Thank you for having me, Brittany. And it was a
Thank
pleasure meeting
you.
you all. Have a wonderful evening. Thank you,
Thank you so
everyone.
much. Bye-bye.
Bye.